QuickBooks Pro Plus Desktop 2022 Deposits from Undeposited Funds. Get ready because we bookkeeping pros are moving up the hilltop with QuickBooks Pro Plus Desktop 2022. Here we are in our Get Great Guitars practice file, going through the setup process with the View dropdown, the Open Windows list on the left-hand side, going to the Company dropdown, Home page in the middle, maximizing that home page to the gray area. Going to the Reports dropdown, Company and Financial, taking a look at that balance sheet standard report, customizing the report with the range change from 010122 to 123122. Fonts and the numbers, changing that font size up to 14. Okay, yes please, and okay. Let's go to the Reports dropdown, Company and Financial. Look at the profit and loss, the P&L range change, 010122 to 123122. Customizing that report for the fonts and the numbers, changing that font up onto 14. Okay, yes please, and okay. One more time, Reports dropdown, this time with the Accounting and Taxes TB trial balance. Range change from 010122 to 123122. Customizing that report, fonts and the numbers, change that font up to 14. Okay, yes please, and okay. So now what we have done, if we go back to the home page, we've been creating invoices and then receiving the payments on them. We then have the sales receipts that we have created, those being the ones that are inside the store. We can imagine kind of a cash register at that point. And now we have this number 5 next to the deposit item, indicating items that are in undeposited funds, created or increasing undeposited funds through the entering of the received payments and the sales receipts. We can verify that by going then to the balance sheet, for example. Looking here in undeposited funds, we got that $28,070.85 in it. Noting that should represent some form of money that we have either in our hands in the form of cash, checks, or possibly credit card payments that have not yet been indicated into our checking account that we're trying to group in some way to go into our checking account in the same format as they will be seen on the bank statement, making the reconciliation process easier to do. So what we want to do now is move it from undeposited funds to the deposited area, not just simply by putting whatever's in there into the deposited area, but by grouping them in such a way so that we can tie out in the bank reconciliation as easily as possible. So if I go back to the home area here, we can go to the deposit, and this, by the way, is why this deposit form is quite useful. If you were making a deposit that did not have a link to something, like it wasn't decreasing undeposited funds, it was not created from a received payment or the sales receipt, then you might just go directly into the check register, and that would be fairly easy to enter it, as we might do like when we first entered the transactions that we put in for our investment into the company and or for the loan. But here we want to link it out. So I'm going to click on this item. Those five items will then pop up. We can see the 5 items that have been populated from the other transactions that we had been making. And I'm going to check off just 2 of them for now, imagining that we are going to the bank. We're going to deposit these 2 into the bank for a total deposits of, we're going to say $7,570.85, or you can imagine whatever your credit card company is doing, how they deposit the transactions into your checking account, and think of it as a similar system in that way as well. So again, you can match out your deposits to what's going to appear on the bank statement. That's the idea. We'll do it in 2 groups here. So I'm going to say at least 2 groups. We're going to say okay. So there it populates in. Let's adjust the date to the 20th and tab through this. Now note it puts the other side to undeposited funds. So clearly it's a deposit. Increase in the checking account. That's usually going to be the default. And then it's going to be on this date. The other side is going to the account of undeposited funds, which has already been populated due to us checking them off in that little pop-up window. So that means we're going to have a total down here of the $7,570.85. That's what's going to go into our checking account. That's what will also appear when we reconcile our checking account to the bank statement, hopefully making it easy so we can just tick and tie off this one single number to what's on the bank statement even though it was created from these two kind of transactions, imagining in this case that we're kind of putting it into the bank at the same point in time. Let's save it and close it and check it out. So we're going to say save it, close it, and let's go to the trial balance to check it out. In the checking account, let's check out the checking. Double clicking on it, we got that deposit. There it is, and notice it's in there for that single deposit, $7,570.85, which we expect to see on the bank statement to check it off there. There that is. Closing that out, and again closing it. Let's go to the other side, which was in undeposited funds. There's undeposited funds. Double clicking on it, then we see it coming out of undeposited funds in the two transactions, separating them out, both of them happening on 120, both of them on the same deposit form. If I double click on it, you can see those two items here. So closing that back out, closing this back out. They're both balance sheet items, no impact on the income statement or profit and loss, even though we received cash because we already recorded the income at the point in time we earned it. In this case, it was, when we recorded the invoice and the sales receipts. So that was fun. Let's do it again. Do it again. That was great. So let's do it again. We'll go to the home page again. And now we've got three left that we're going to imagine we're going to deposit those at the same time. So I'm going to go back in there for those last three, click on those items. And then we got the pop-up window that pops up. They say, hey, look, you got these three items in undeposited funds. I'm paraphrasing. This is QuickBooks talking to me. Hey, look, we got these three items that were in undeposited funds. Are you depositing those together? Why don't you check these off in the same order that you're going to deposit them in? So we'll check them all off, adding up to the $20,005, imagining that's what's going to go into the checking account in some way, shape, or form, either by us walking the money over there or by the credit card possibly. That's what we think they're going to group the deposit into our account for. So I'm going to say, okay, that's what we want. Let's then say it's going to go into the checking account. Let's put this on the 21st, changing the date. For these three items, it automatically posts the other side to the undeposited funds. And we got these three separate amounts adding up to the $20,500. Transaction related to this will be an increase to the checking account, decrease to the undeposited funds, bringing undeposited funds, I believe, at this point down to zero once again. So let's save it and close it and check it out. Save it and close it, check it out. Let's go to the trusty TB, trial balance. And notice undeposited funds is still there on the trial balance, even though at zero, that's kind of the default setting on undeposited funds, which is nice on the trial balance, because then it allows you to say there was activity in this account, even though it goes down to zero. The undeposited funds being what I would call a clearing account, which is different than a temporary account. The temporary accounts being the income statement accounts down here that we see that will close out periodically to the equity section. Clearing accounts are even more temporary in nature in that they're just going to be there to hold on to something, and then they're going to clear back out to zero generally. In this case, they're there to hold on to something until we group that information into the grouping that we want before putting it into the account that it's ultimately going to go to, that being the checking account. So if I double click on it, you can see what should happen in this account. It should basically go up and then go back down. And because it records these transactions separately like this, it allows us to tick and tie off what is actually happening quite easily. There's the 5,000, there's the 5,000, and so on, even though we deposited them at one time. So if I double click on this, for example, these three transactions add up to that one deposit of $20,500. Closing this out, that allows us to tick and tie off these items up top. If I go into the checking account, closing this back out into the checking account, it records the deposit there in one lump sum amount, which is good for the checking account because that lump sum is what we want to tie out when we do the bank reconciliation to the bank statement, and the bank knows what we got deposited by just what we put in terms of a lump sum. So that's going to be the general idea. There's going to be no impact to the income statement again, which is taking it out of, in essence, one cash account and putting it into the other cash account. If we go to the balance sheet, you can see the same kind of thing here, but notice undeposited funds has disappeared. That's why the trial balance is kind of useful to use. But if you like going to the reports, instead of the trial balance, you could go to the customized reports up top and say that you would like to go to the advanced settings. and I'd like to see display rows. I want to see the active rows. That means you want to see the 0 rows that have 0 balances if there was activity in it in the date range that you're choosing. So I'm going to say, show me those active rows, and then OK. And so now we see the undeposited funds there again. So in your internal reporting, when you're using the balance sheet for internal usage to check your transactions, you probably want to see the zeros that are active, maybe even all of your accounts. You can change it to all accounts, but the active ones possibly, for sure, most likely would be useful. And then when you're doing the external reports, the ones that you're going to give to the client, then you want to remove the zeros because the zeros are of no value for reporting purposes for external reporting.